Thanks, legends. Thanks for coming and listening to us prattle on about tax. Got Adrian Forza here with me from Crypto Tax Australia. You're based in Melbourne, yeah?
Correct. Yep.
Correct. Yep. Yeah. But the last time that we caught up, that was in Sydney, wasn't it? That was the
CryptoCon.
Yeah. Did you get a last one?
Yeah. We had a stall there in the last one.
You didn't have a stall. The one before when we caught up. Did you?
No. But then the year before we had one. Yeah. So maybe like every 2 years, you know. So yeah. Will I have one this year? Probably not. I mean, depending on what the market's like, it's a bit
Yeah. Well, I mean, if all these changes are coming in, well, it looks like that they will because of what Labor's done that deal. Oh, not Labor. The Greens have done that deal. Yeah, you might get like a heap of questions because of all the changes. I mean, that's really what's made me think of doing this. I mean, it's almost selfish in a way that I'm doing it because I got a couple of questions, but not so much that it affects me as much as it would other people that are trying to get into the market, or just trying to get their first house or whatever. Because like trying to help everybody get into the market, but then the rules have made it more expensive, as I understand it, for like low income people and retirees and people on, fixed incomes and stuff like that. And I'm hearing stories now of people that are self-funded retirees that are trying to change things or reduce their income or something. So it triggers them getting the pension by even only like a couple of bucks, because if you are a pensioner, all of that minimum tax thing goes away. Is that how it works?
Yeah, you get an offset if you're on the pension. It's called the senior and pensioners tax offset. But you also get availability to like the Commonwealth Healthcare card as well for medicines.
Okay, so if you're self-funded retiree, you don't get the health.
I don't think so. I mean, don't quote me from. I'm pretty sure you have to be on the pension to get that. So some of these medicines that people take are really expensive. Yeah. And I think it gets dropped by like 75% or 80% or something like that.
Right.
Yeah. Everyone wants free money from the government, so they'll spend, 200 grand at the pokies just so they can collect $500 from the government every week,
Well,
it's true.
But it's tax free, bro. See, gambling in the country for some dumbass reason is tax free, but you're banned from using online gambling. You have to go.
Well, crypto gambling. Yeah.
Well, I mean, sports betting, even sports betting too. Like, you can't do live sports betting. That's banned. You can't do, like stuff like Polymarket and whatever as well. Like you can bet on sports, but for some reason you can't bet if it's like live during the game.
Can you still do it actually at the TAB?
I don't know. I don't go there.
Yeah.
It seems odd. It seems really odd. Like you would have this one tax rule, which is really awesome, that you don't pay tax on winnings, but then everything is banned anyway. So, I mean, wouldn't you just like tax the winnings and just let people gamble like on Polymarket or whatever? Because people are going to gamble no matter what. So you're taxing like stock trading and crypto, which is basically a form of gambling because nobody can predict the future. We are getting off track. Maybe we should give me the 30-second elevator pitch on what you do and how you got into this. Have you always been an accountant? Like, is that what you wanted to do? Or
yeah. So I was an accountant for about 7-8 years at a traditional firm, like a small mid-tier firm. Obviously learned a lot of ropes, all that sort of thing along the way, and then crypto came along, and I got involved like early 2017. Late 2017, I noticed no one was doing like tax for crypto. And it was really unknown back then. Like no one thought you'd have to pay tax. And that obviously kickstarted this whole cash in, cash out, mentality. Oh, I don't get taxed until I cash out earnings, and that like stayed a myth for a long time. And yeah, so then in early 2018 or 17, so late 2017, I opened up my own firm on the side as I was working for this other accounting firm. So I was doing two at the same time. Back then there wasn't, all these tools that were available. It was easier, but it was harder because you didn't have all the tools available. There was like an old one, maybe some people might remember, it was one called Bear Tax. There's a software called Bear Tax, Bitcoin.tax there was.
Oh, I think I remember seeing that one.
Coin tracking,
Yeah,
which is obviously still around. But, everything was Excel. There was no like APIs back then to bring in data. So I would be like manually manipulating all these Excel documents and trying to put it in the software and, line things up, and basically like self-taught because there was no rule book or there was no handbook of how you do crypto accounting back then. There was like new things like ICOs that came out. And then, so I started that way, got a few clients through, Facebook and YouTube videos and things like that. And then in the heart of the 19 bear market, which is about January, February, I think it was January 2019, when Bitcoin was at like $3,000 or $3,500, I quit my other job and just went to do this full time, which obviously took a lot of guts because obviously back then everyone thought crypto was dead. Bitcoin went from 20 grand to 3.5. ICOs were all dead. Everything had just like melted away. But obviously, yeah, I saw that it was the future in terms of, or part of the future. And then, yeah, we've grown to a team of about 10. I mean, there's obviously been like heaps of changes along the way. Back then there was the ICO craze and, then DeFi summer came along in 2020, 2021, and FTX collapsed, Celsius, Luna, and meme coins, and 500 layer ones, and every obscure chain, and so yeah, it's changed a lot in 8 years now, 7, 8, 9. Yeah.
It's has it settled down like from a variety sort of perspective? Because I think we've covered like you got chains and side chains, and we've got NFTs, and we've got collectibles, and we've got TGEs, we've got airdrops and ICOs. Has there been, like in the last 12 months, is there anything new that's come along for you? Settled down?
Yeah, I mean, obviously with the market, it's settled down a lot. I don't suspect there's always people that are trading, right? So, the majority of people.
I guess I meant from a tech perspective, there's no new crypto technology that the tax law hasn't quite caught up with yet.
If we look at back when the ICOs came around in 17, 18, by the time the ATO caught up, it was 2020.
Right.
And they issued, guidance around then. So it was 2 years later. Same with DeFi. DeFi 2020, 21, 22, obviously probably 21 was like the explosion. And then they only came out with guidance in terms of DeFi in 2023.
Right.
So, now they talk about wrapping and bridging and staking and all this sort of thing. The ATO is always behind the 8-ball because the technology moves so fast. And then obviously there was NFTs as well. I mean, now there's probably more real world assets. Stocks.
That'd be the new thing. Yeah, that'd be the new thing.
Stocks is the big one.
Yeah, I've noticed that. Here's a good question then for you. So there's two, at least in Solana land, there's two types of stock tokens. So there's the ones that are created by X stocks, which are more of just a representation of the stock, and it follows the price of it. But then there's these other ones that Backpack are doing that are straight up equities, and you can move them in between Backpack Exchange and a actual like equities trading account like Schwab or something. So
that was recent, wasn't it?
Yeah, that's well, I mean, Backpack, they're a KYC exchange and everything. So, but they're on chain, but it's not like a Jupiter or a Uniswap thing where you just connect your wallet and go. If you want to use that DEX, you have to, you got to sign up, hand over your credentials, and this thing that they've, that's recently gotten attention due to the SpaceX launch, which they nailed, right? If you buy SpaceX on their exchange, it's straight up SpaceX stock, like the real deal thing. Yeah, so that will be interesting. I don't know. I mean, the ATO would be well behind that. I don't know how that would work. I guess from a trading perspective, it's the same thing. But how does that work? Just from the stocks, like if you went and bought SpaceX stock as an Australian, like is there special Australia, US tax treaties and things that you have to worry about?
Yeah, I mean, there is, but I don't think there's anything you need to worry about. You're just essentially buying an international stock at the end of the day. There's nothing.
Right.
But in terms of trading it on or buying it on Backpack, if it's an actual stock, it's an actual stock. It's obviously like bridging that gap between stocks and crypto where you couldn't trade between, SpaceX and Bitcoin normally.
No. No, you can do all that now. But there's no franking credits or anything like that because it's a US store. Yeah. Now I got a bunch of questions from the community. So how about we go through them? So let's just start with the summary then. So
AGT.
Let's start there. So there's a whole bunch of changes that come in like May and then even recently in the last couple of weeks with like capital gains tax and negative gearing, just like a summary of all that, I guess. Nice neat little I mean, like the whole country's had time for it to sink in a bit, but what's the general gist that really affects like, a crypto trader or just even someone trying to save for a house? What's the deal?
Well, I'm going to go on a tangent here, but
I like tangents.
I think they're just trying to screw the middle class, as everyone's doing, because it's, these changes, yes, they do affect, the upper class, I guess, if you want to call it that, but not as much as the middle class. And it's for a couple of reasons. Obviously, and there's a lot of different changes, and this is where the issues are. I think they've gone overboard in terms of the changes because you've got, the changes to the 50% discount, which is going to move to indexation at the 1st of July 2027. There's also going to be baked into that a 30% minimum. And that 30% minimum, like if you're a high income earner already, it doesn't matter for you.
Doesn't matter. Yeah.
So if you're, a mum and dad, typical scenario, dad goes to work, maybe mum's home with the kids or she's working part-time, she's got some shares or crypto, and her income levels are really low, she goes to sell some, and, she makes a gain of, 30, 40 grand, whatever, holds it over 12 months, goes down to 20,000 as a taxable income, no tax. Now, no discount, 40 grand, you're going to pay, and then you're going to have this minimum on, say, 40, 50 grand. That's like 15 grand worth of tax now instead of zero.
Yeah.
So who's it really helping? Because it's the lower income earners or the middle class that are trying to invest, make a little bit of money. And like if they wanted to go after rental properties, then they should have just subjected it to rental or done something else in terms of, the negative gearing changes and not touch other investments like crypto, gold, stocks, etc.
Yeah.
Because like if you're a young person trying to save for a house, then you might say, okay, well, I might put, $200 a week or whatever it might be and dollar cost average into stocks or crypto. And then, after a few years, it might grow to a, 60, 70, 80 grand, whatever it might be. I sell that down, I get the 50% discount. Maybe I pay like 10 grand in tax or something like that. And then I can use that money to then buy a house. Whereas now, there's going to be this like there's going to be no discount. It's going to be based on inflation, which is extremely bad for crypto because we know obviously crypto can go up dramatically. There's no more do a 5x in a year and hold for a year in crypto and then get the 50% discount, because all it's going to do is it's going to be offset against the inflation rate, which is, call it 3%. So I've got a calculator which I'll show, but in that example, that person who's trying to save for a house is now going to pay more tax, so they're going to have less money to then put up for it to buy a house. So it doesn't make sense, especially with both the CGT discount going and this minimum 30%.
Yeah, and on top of that, you're taking the risk, right? So,
correct.
With crypto, it's a massive risk, and then the reward at the other end doesn't really make any sense anymore. You're almost forced to be a trader, really. You want to do short-term stuff because holding it long-term, you don't get the benefit, and you're increasing your risk profile because you don't know what's going to happen in crypto in next week, let alone 12 months, right?
Correct.
It's so volatile and crazy. And then you've got the orange man doing volatile and crazy things too. Well, actually, we got two orange men now. We got Trump and Saylor doing what the hell is that guy doing? The whole thing is getting very messy. Who's most affected? So I think we've just covered that. It's really the rich people that would already be in the top tax bracket. Nothing really changes. They would be doing their stuff. They would be doing their stuff in a business thing anyway. Like the top end of town have trusts and protections and overseas shit, and they're all fine.
Yeah. But I mean, obviously they lose out on the discount as well. But the whole 30% minimum doesn't affect them. Those, depending on where you are, like if you're a boomer generation and you've been holding, Microsoft stock for like 20 years.
Oh, yeah. How does that work? Because I saw posts about that where people that had a house forever or stocks forever, and then when the rules change, they're up for all this tax. Is that because the index? You might be talking about the pre-CGT assets. So maybe
that's pre-CGT. So capital gains tax came in 1985,
right?
And they did an indexation method up until I think 99, and then I think it was the Howard government brought in the 50% discount.
Yeah, that was Howard. Yeah, that was Howard.
So all those pre-CGT assets. If you bought, stocks or a house, in 1980, for instance, and you sell it now, it's capital gains free. But what they're saying, yeah.
So it's not indexed at all?
No.
Real?
Yeah.
Wow. I didn't know that. Sure.
Yeah. So, but they're changing that now. So essentially what's going to happen is, let's say you bought a house for like 50 grand in 1980, and then you have to do a valuation up until 30 June 2027.
Yep.
And let's say that house was worth $1,050,000. So at the moment you're sitting on an unrealized gain of $1 million. And this works, similar to how post CGT assets are going to work as well. You have this valuation period at 30 June 27, and then any increase in value after that, subject to indexation, will be taxed. So let's say you then end up selling it for like 1.15 a couple of years later. You made 100. That up until that point in 30 June 27 is tax free, and then that extra 100 grand that you've made in between that period, less the indexation percentage, is going to get taxed
at a minimum of 30.
Yeah.
Right.
Yeah.
So
correct.
So it'd be in a year, I don't know, like 5% inflation. So I don't know, whatever. and then you get taxed on the difference between the inflation amount and the current value at a minimum of 30. Right.
Yeah, so you're looking at 25 to 30 grand tax. Yeah.
So that's the same. That's the same with any asset, right? So if you got crypto and you have held Bitcoin in cold storage like forever, at June 30, 2027, you have to figure out how much that is. And that's fairly easy because the price is on the exchanges. So then going forward after that, so that line in the sand there, you figure out how much you would pay in tax then, and then you add on the index after that.
Yeah. So there's going to be two calculations.
Yeah.
There's two calculations. So let's say I bought Bitcoin for 10 grand in 2020, for instance. I bought one Bitcoin, and then I haven't sold it up until 30 June 2027. Let's just assume, I'm just going to talk AUD values just for the sake of it. Let's say 30 June 2027, Bitcoin is 100 grand Aussie or 110 grand Aussie. So I got 100 grand as an unrealized gain up until that point. So that's locked in as the first calculation, and I get 50% discount on that. But there's no taxing point until I actually sell. So that's just like deferred tax locked in point, right?
Right. So it's effectively like you sold it even though you didn't.
Yeah.
Because if that price goes down, let's say, I don't know, quantum computers come out and gets hacked, right? And it goes to zero and everything's wiped out. Normally you would book a 10 grand capital loss. But you're saying that everyone's screwed and we have to pay tax on the number that it was at June 30, 2027.
No, well, yeah, there's a lot of scenarios like that I've run, because there's like 9 different scenarios or so with what each value is, how much you bought it for, what the valuation was, and what you ended up selling it for. In that instance, and again, we don't know 100% how everything's going to work because they haven't come out with all the explanatory details on how everything should line up, because normally previously you have like an order of CGT events and how you allocate them. They need to rewrite that with these new rules. So the way that I understand it's going to work is, let's say if that did happen, you would still only get taxed on like the realized gain or loss. So you would have this weird situation where you'd have $100,000 capital gain, 50% discount. So you got this 50 grand net gain, but then you have this like capital loss of 110,000, and then that gets offset against the net capital gain. But then you've got this order of things. So, you would need to gross up if that's all you had and you didn't have any other gains or losses or short-term or long-term, and that was a simple calculation, then you would still gross the gain back up because you need to gross it up before the discount. So you'd still end up with a 10 grand capital loss anyway.
Okay.
It's just a weird calculation, but it can get manipulated in the way that if you've got like short-term or other long-term gains within that same financial year that you sell, you can sort of like take advantage of it a little bit in that respect. If your valuation is higher than what you end up selling it for. It's very strange. Like, I don't think they've worked through. No, they haven't.
I think everybody has that feeling.
And who knows, like maybe Liberal's going to come in, or Pauline Hanson, who knows, and come back and say, oh, actually, you know what, we're going to give the 50% discount back. So there's going to be 3 calculations to be done potentially.
Yeah, because the next election's not until 28. So by the looks of it, the laws are going to come in, and if they change, they're not going to change for another. So there'll be this year or 2 years of really weird accounting, right? Well, I don't envy you at all. That would be annoying.
Yeah, it's I'm used to doing the calcs in my head, but now with these rule changes, I need to step back and think a little bit more, because you've also got like that 30% minimum that comes into play as well. Like that's another added step.
Yeah.
And then you've got like this added step of the minimum 30% tax on discretionary trusts as well. And that's another thing that's coming into play. So
explain all that.
yeah, so if you've got a discretionary trust, so like for instance, I've got all my assets in a discretionary family trust.
Yeah, so is that the one where you can decide who in the trust gets how much money?
Mm-hmm. Mm-hmm.
Right.
Yeah.
Okay.
Yeah.
Okay.
So you have discretion of where you want the money to be allocated to. In my family, I'm working, my wife's not working. My part of my income, from crypto or other sources gets distributed to my wife. She's not working. So I might distribute to her, 50 grand, for instance, and then she's under the certain threshold at 14%.
Mm-hmm.
Whereas now that's going to change. And what's going to happen is the trust, or the trustee of the trust, is going to pay this 30% minimum, and then that gets flown through to the beneficiaries that receive that income, and they get this non-refundable, keyword non-refundable tax offset. For those that understand shares and companies, if a company usually pays tax at say 25 to 30%, they pay a dividend out to its shareholder. The shareholder includes that dividend in their tax return, but there's these franking credits that are refundable credits that offset the tax, so you don't get double taxed, right? And then in some instances, if that's going to a lower income earner who's on no income, their tax rate 0 up until 20 grand, and then 14 or 15, whatever it is at the moment, up until 45. So it's less than the 25. So they'll get those refund credits back in their tax return. Essentially now what's happening is it's similar to that concept around the franking credits, but it's a non-refundable credit. So you will still have to pay a minimum of 30%. And even if your income thresholds are lower, you don't get that refund offset from the tax that the trustee has paid. And this is where people are really annoyed, because one, you're trying to share wealth and save wealth within the family group, which, everyone wants to do. Or you might have, a family business where you pay distributions out. You might be running like a restaurant or something, and then you pay the kids a distribution for working there, etc. But now it's going to be subject to this minimum 30%. Again, like this, it's not an attack on the high income. This 30% minimum is not an attack on the high income. It's an attack on the middle class, working class that are trying to save, because 10, 20 grand to someone rich isn't much, but 10, 20 grand or 30 grand is a lot to someone that's earning 100, 150,000, and now you've got, this 30% minimum on the discretionary trusts, 30% minimum on CGT. That's why people are wanting to leave Australia, because it's I would be very surprised if Labor gets in again, because I think normally on budgets in the past, there's been like some major changes here and there, but this is the most dramatic probably since I've been in practice. And it's probably the most that other individuals around the country have been interested in this budget, because it affects them so much. Whereas before there was some changes here and there, and it's like, it's not much, but this is really affecting them.
Yeah, like the last time that I can remember a tax law or whatever that's come in that's affected everybody would be the GST. And that got tried to come in a few times, I think. And I think it was John Hewson or somebody. They tried to bring it in one time and they got absolutely crucified and they lost. But then they brought it in again, obviously, because we've got it now. You talked about, people leaving the country. If people were thinking about leaving the country and perhaps going to New Zealand, for example, because they don't have capital gains tax, do you know much about that?
That's the only part I know about New Zealand.
Right? So, okay. So if you were to leave the country, is there like an exit thing that you got to pay, or?
Yeah, I can't remember if there's special rules with New Zealand specifically, because I know there's special rules for New Zealanders coming to Australia as temporary residents. Like there's like this sort of bit of a loophole in there that they're not a resident of any country for capital gains purposes. It's weird. But the other way, I'm not sure. The standard, just because we're so close to New Zealand, we've got that relationship. So I don't know if there's special rules exactly for Aussies going over to New Zealand, but the standard rules are you have a choice between when you essentially become a non-resident, then you can either elect to sell your assets at market value, or you choose and you pay the tax in that tax return that it falls into, or you pay tax on when you actually sell the asset, which is obviously a lot more work because obviously keep track of that a lot better. But then you need to continue to do tax returns in Australia for that period. Whereas if you just cut off and say market value, I've left the country, you just do the one tax return and then you're free. So it just depends. Like for instance, right now, where the market is for crypto, it's probably not a bad idea to go market value, just in terms of prices. But if we were in the heat of, say, a year and a half ago, at when Bitcoin was at 120, probably not a good idea to do market value. You'd want to do it as you sell down the assets, because you can be in a situation where you go market value at 120, you don't end up selling it, and then you got this tax to pay on money you don't have anymore.
Yeah. So that happens a lot. Like with it doesn't happen to me because any time that I'd rarely get an airdrop, I insta sell it. Right. So maybe for those that don't know about how the tax works for airdrops, because it's fucked, because it's classed as income, right?
It depends if it's a initial airdrop. Initial as opposed to what? As opposed to airdrops that you might receive, as part of the ecosystem. Like a prime example is Uniswap. When the Uniswap airdrop came out, you received that. That was an initial airdrop. Yeah. So that's not taxed until you actually sell it. Is that so? You see, yes. I thought it was once the free tokens hit your wallet, that's money and that's income. So that's not the case. Well, it depends, if it's the initial or not. So let's say like 3 months. Initial, though. How does that work? No, sometimes you get additional airdrops along the way. Well, subsequent ones, but I don't know of too many protocols that hand out more than one airdrop. No. Right. So are you saying, as the tax laws are, if you get an airdrop from a protocol and it's the first one that they've ever given out, that you don't count it as income until you sell it, no matter what the price is. So it's not a capital gain or loss, it's just income. Yeah. So, I mean, if you jump on the ATO website, they've got guidance on it. They talk about, this is what they specifically say. They say, a crypto project may have an initial airdrop of tokens that is the very first distribution of its tokens. These tokens are the initial allocation if there has been no trading in the project's token prior to the airdrop. You don't derive income or make a capital gain at the time you receive them, only when you sell them. Okay. So if the protocol has been running
and the token's launched and there was no airdrop, but the token's launched and people have been trading it, and then they do an airdrop later and it's the initial airdrop,
I would say no.
you would say no. So that means as soon as you get it, then that's classed as income, is what you're saying? Or you're saying no, it's not, and it's only if you end up selling it, that's the price that you sell it for, and that's the tax amount?
Yeah. See, they what they say. I mean, yeah, it's a good example. They say these tokens are the initial allocation if there has been no trading in the project's tokens prior to the airdrop.
Yeah, but there's many an example of the token gets launched, is tradable, like because people will buy it, like investors will buy it early, or there'll be a TGE or something where you can buy in for the launch. Then it launches, and it's trading, and then people that were doing community events or whatever, like even just signing up and then share posts, and they say, "Hey, look, here's my Twitter handle, and this is what I did, and you get this many points for that," and then they get the airdrop. So it's been trading before the airdrop goes out.
Look, we would treat it as zero.
Yeah. So
that's how we have been treating it.
Yeah.
When you sell it.
Okay, right. So when you sell it, not when you get it, because yeah. So there's two. Yeah. So you got this
like Sarknet or something. Yeah.
Yeah. Okay. Oh, that's cool. That's good to know. Because only because I think that's what I've always done was for the whole tax thing. Because I heard it may not happen in Australia, but in other jurisdictions, I've seen posts on Twitter where people have held the airdrop thinking it was going to do wonders, and then it doesn't, and then they've got this massive tax bill and can't pay it because the tokens that they've got are worth nothing.
Maybe in overseas it's different.
Yeah, that's what I mean.
But I think like and I know that the HO doesn't make sense anyway, but from a common sense point of view, like you could actually be gifted an airdrop and not even know it. It goes in. Mm-hmm. So if you get like gifted this $100,000 airdrop, like let's say, what were they? Bored Ape tokens. Like that was huge. Yeah. And then you're paying tax and you're like, well, I didn't even know I got it. Yeah. I don't know if you needed to like connect your wallet and get the allocation or whatever, or they just sent it. I'm not sure. I don't think it's fair on that back end. Like you might not check it for 3 months and then the token's gone down 90%. So with things like memes, because they tend to go to zero a lot, or they get exploited, right? And the token itself is now rendered useless because sometimes they get, it doesn't exploit, so we'll just mint a new token and just give it to you. Yeah. You can't trade the old token anymore, right? So you can't sell it. So how do you lock in the capital loss? Well, I guess there's like a couple of arguments there. Is it a capital loss if they're giving you a new token to replace it? Well, but okay. But here's another question then, because the ATO will say if you wrap a token, it's different, even though it's the same thing. I don't even want to get into that argument because I get angry. You see what I mean? So you're saying that you were given another token because the old one busted, but it's a completely different token at a blockchain level. But spiritually, it's the same thing. That's like me putting Bitcoin onto Ethereum to lend it out to earn a yield. It's my Bitcoin. It's the same Bitcoin. It's just wrapped. At a blockchain level, it's completely different because it's on Ethereum, not Bitcoin, or it's on Solana, not Bitcoin. But spiritually, it's the same thing. Yeah, like you can untangle that a lot more. I think, as time goes on, I think like instances I don't think Bitcoin and wrapped Bitcoin is the same. I think that's different tokens. Well, I mean, are you saying like at a higher level they're different? Because like to me they're the same. Like tech like at the tech level, no, they're not. It's not the same because they're completely different chains and everything.
But to me personally, I'm lending out my Bitcoin, or I'm borrowing it, or I'm using it as collateral on a trade or something.
The issue that ATO has is, like in that lending scenario, are you getting back the same Bitcoin? Exactly the same Bitcoin, or is in, the same UTXO that's coming back?
Well, you never do. That's not how UTXOs work.
Well, correct. But
right?
This is where, I mean, recently, not even recent, it was a while ago now, an Aussie company called Veold, who does Bitcoin lending, got a private ruling. I don't know if you heard about this. Their product allows you to put Bitcoin onto their platform. It gets sent to a separate wallet, and then you can borrow against that in Aussie dollars and obviously pay an interest rate. And they went through and got a private ruling through a solicitor and with the ATO, and the ATO ruled that that is not a taxable event because of the way that the deal is structured and the collateral, and when you pay back that loan, that Bitcoin that is on that wallet comes back to you. So it's essentially, in the ATO's eyes, the same Bitcoin. Right.
How is that different than what I would do in DeFi?
Because they're saying that your Bitcoin is going into a pool, so you're not getting back the same asset, which
Veold's wallet is a pool, right? Or
no, it's not. It's not a pool. No, it's a separate wallet. It's a separate address
per user.
Yes.
Yeah, well, there are DeFi protocols that do that as well.
Is there?
Yeah, like when you like if you go to a DEX, I mean, a trading exchange, and you open up an account, you send your money to a wallet, which is not shared by anybody else. After it goes into that wallet, the DEX itself might move it again. Maybe, I don't know.
Yeah, that's the issue. Yeah.
Right, but it goes into a wallet that you own, right?
But then, like afterwards, when you get that one back,
let's assume that it doesn't move afterwards, right? Because if you're trading on a perps exchange, that would sit in an account that's just your account, and because it gives you the leverage that you can trade against, right? So the ATO is cool with that. It's just about if it goes into a wallet that has commingling with everybody else.
Correct.
Right. I still don't see why that would be an issue.
Because part of what they talk about is, do you still have beneficial ownership over that exact asset?
Yes, you do. Of course you do. It's in code. How else can you withdraw it without it?
But are you getting back that exact Bitcoin? That's what they're arguing.
Well, you could program it that way, because it would be sent to our particular wallet address, and then you just say, well, I want that Bitcoin that's in that wallet address to come back to me, not...
Are you talking about like where they segment it, or like they say for Aave, for instance? I think it just goes to a...
it'll go to a pool. If they're doing some sort of Uniswap V2 style pool thing, then everything just sits in one address.
Yeah.
Right. Okay, so that sucks.
Yeah, so I
still see what the difference is, though, right? Because one token of one Bitcoin and another Bitcoin are the same thing.
I totally agree with you.
But okay,
that's just the way that they see it.
Those rules probably exist because of how it's existed before in like TradFi land with shares and whatever. So what is the deal with that? So what happens in TradFi land that makes that rule necessary?
I don't know the answer to that question. I mean, behind the scenes, I just think the ATO wants to try and have as many taxing points as possible, because it's essentially,
of course,
hey?
Of course,
yeah. And I mean, we're in a sort of court proceeding at the moment that's been on this audit for 4 years. Actually, it's been 5.
What, with a client of yours?
Yeah. And we're in dispute with the ATO, and experts are involved and barristers involved, etc. And one of the big contentious issues is around wrapping and depositing ETH into Maker. So this client held Ethereum since the ICO, bought a shitload of it, and deposited it into Maker. And they're saying, well, it gets wrapped before it goes into the proxy contract.
Yes.
Therefore, we're going to deem that interaction is taxable.
Okay.
And that's like a $10 million question for this client.
Yeah, but that just playing devil's advocate, doesn't that work out in the wash though? Like when it comes back out to him, the next taxable event will be at the price that's way higher than it was at the ICO, right?
Yeah, but he hasn't sold it. He's just putting it on Maker to borrow against it for DAI.
Yeah. Okay, spot on. So the problem here is that he's being asked to pay a tax bill that he doesn't have the money for because he
hasn't realized it.
Yeah, he hasn't realized it, but he doesn't have the money anyway because it's inside Maker. He would have to withdraw it from Maker and hope that the value is enough to cover it. See, that's like that airdrop thing. That's right. See, yeah. So they're contradicting themselves, the ATO. So you've got the airdrop rule that says, we'll tax you when you sell it, but then you got this other one where it's the same token, but it's wrapped, and now we're gonna say, oh no, they're different tokens now. It sucks. It's a like we could talk for the next 6 hours about it.
Yeah, look, I just hope that potentially the client tries to push for that. Client's over it at this point. It's been 5 years. But if we can bring that argument to court, and we've had blockchain experts in terms of analyzing the whole Maker code and contract on how exactly how it works to say, well, based on this, it's not, you're not losing beneficial ownership. It's not a different token. I'm talking 200 pages long, and getting into the technical. But it needs to go to court, and then the judge to say taxable, not taxable at the end of the day. And obviously, it's in the ATO's best interest to pump as much money as they can, because if that comes out and they say that wrapping is not taxable, that's going to
great.
Well,
That would be great.
That's how it should be. So
that's how it should be.
Hopefully that goes through.
So with private rulings, then, how does that work? Can anybody get a private ruling for themselves?
Yeah,
and that's how much does that cost?
Just depends on how much back and forward there is. I mean, you can draft a private ruling. I mean, you can draft it yourself if you really want to. I mean, usually you'd have a solicitor and an accountant doing that, so it's written in the correct way, and then that gets submitted to the ATO. They could take between 2, 3, 4 months to get back to you. There might be some back and forward. It's not a submit it in 1 week and, it's done, basically. So it's a long process. The cost will just be evaluated by the accountant and the solicitor's time, depending if you've got both involved. Yeah.
Yeah. Can you, this is probably a no. This is probably a no because it's a private ruling, but can you piggyback off somebody else's private ruling?
I think you can, in a limited way.
Like if you're doing the exact same thing, if someone goes to the trouble of saying, hey, I'm wrapping something and I'm putting it into Aave, and I want a private ruling to say that that's my stuff and I don't have to pay a CGT event.
Yeah, it's funny you say that because I've actually downloaded all of them for crypto.
All the private rulings?
Yeah.
How can you do that? Are they public? So a private ruling is actually public. Yes,
they are. I mean, they don't give the person's name. Obviously, they don't give they don't give figures. They don't say, this cryptocurrency, Bitcoin was sold for $100,000 or whatever. They just say one cryptocurrency A was sold for X dollars, which sometimes doesn't help because, especially like if
Because
you're
you're
talking
wrong.
about trader, investor, figures matter. Yeah, there's a lot of rulings on personal use. Is this a capital gains event? Like lost for exchanges, that type of thing. There was a heavy period between probably like 21, 22 that there was a lot that was coming out. There's still some that are getting done, but it's slowed down a little bit. And again, what you need to remember is the ATO's got guidance on their website, but that's not law as such.
Right.
The only time it will become law is if it goes to court. That's the big one. And that's why you need people to have deep pockets that's going to affect them greatly, challenge the court.
Right.
Because you need to pay accountants and solicitors big dollars by the time you go back and forward, and barristers.
Yeah.
So the little guys like me and you, we're not going to drop $300-400 grand for our, $100,000 tax problem.
No, not. It'd be a nice problem to have, wouldn't it? Let's go through some more questions. So privacy, traceability, and on-chain stuff. So a common one is if they don't know you have it, does it exist, right? So if I'm trading away on an anonymous wallet, nobody knows about it except you. You're making a ton of money or you're losing a ton of money, whatever. There's no links to anything that's KYC'd, but my guess is that eventually one day you would slip up and then you can just go and backtrack that through to the start. And then, you've done all these trades 3 years ago. You're like, has that happened before, or what's the deal with all that?
Yeah, look, I mean, when we do our reconciliation, obviously we go through everything. I mean, sometimes there's situations where, the client who say, "Oh, where's this wallet from?" "Oh, that's an old wallet." So then we obviously add it in and etc.
Yeah.
Or some people just say, "Oh, no, it's a friend's wallet." We have to
how does that
take
work?
that on face value.
Yeah, the common comeback is, well, it's an anonymous wallet, proved that it was mine, right? I could have just, so the trading wallet is here where you did stuff or whatever, and then you move some money to another wallet, and then you move to another wallet, and you're doing other stuff, and then you cash out. It all links back to the original wallet, but you could say, well, it's not my wallet.
Well, the issue is,
how do they figure that out?
Well, they probably don't have the resources or the tools to do that yet. Maybe if it's like for big dollars, they'll do it. But the HO is not going to come and track your, $10,000 wallet that you're just, keeping secure from the, private from the government. It's not worth their time to do that. But the big problem is like you could make a shitload of money, but then how are you going to get that money out? Like it's harder and harder now to do that. Beforehand, maybe in 17, 18, 19, local Bitcoins, you could trade for cash and all that sort of stuff. There's not as much anymore, especially with all the exchanges now with the new travel rule coming in. And the AML and KYC regulations. It's getting harder and harder. Maybe you might be able to send some Bitcoin to a mate for 10 grand cash, but no one's going to pay you 100 grand cash or $1 million in cash. So that's the issue. And say, for instance, you might have been accumulating all these years, and then you end up cashing out. Well, you got to prove how you accumulated that. And if the question gets probed and then they start looking down further, then they'll say, well, hang on, how come you never declared this 3 years ago? If they really want to be arseholes, then they'll just hit you with interest and penalties.
What's the cost of that?
Sorry?
So is the index, the interest just inflation or CPI or something?
No, the interest is like 10, 11%.
Yeah, right, okay.
And then penalties.
Yeah,
on top of the tax, and then there's penalty. But they'll go back to when the tax was due, and then the penalties, depending on what you did, there's 3 tiers, 25, 50, and 75. So did you just make a mistake, an honest mistake? We'll either let you go or we'll give you 25% tax. No, sorry. So let's say it comes out that you've got 100 grand worth of tax to pay. They'll go 25%, that's an extra $25,000 penalty. If you did something malicious and you weren't cooperating, 50%. And if you just like intentionally disregarded completely and just like told them to F off, essentially, in a nice way, they'll hit you with a 75% penalty. So an extra 75 grand. The most I've ever seen is 50%.
Right.
So like, for instance, this client, you know, we calculated their gain, the one I was talking about before, of like 2 million or 3 million or something. They've come back and said wrapping, you know, we think it's 12 million. And we're going to hit you with a 50% penalty because, you know, we don't think you're cooperating, which was total fucking bullshit because we literally gave them everything. It's just like it was just a tactic. We'll just add this on so there's more things that they need to argue about. Plus they hit the interest. So it ended up being like 17 million. It was ridiculous. It went from like 2 to 17.
Of tax?
Yeah, tax and interest and penalties.
Yeah, right.
So then the lawyers have got to argue around, well, why are we getting this 50% penalty? We've come forward and lodged everything. We've given you all the information and you're saying we're not cooperating. You know, I can go on and on and on about the story. But the other thing I wanted to sort of touch on with the hiding of, you know, the ATO is not good enough yet to track everything, you know, so they're not going to go and hop 3 hops along to go and find your wallet. But the big thing is when you cash out, especially in large amounts, there could be issues. Like I had a client where they came to us in 2021 and it was a boyfriend and girlfriend relationship. They both invested in Bitcoin, like in this wallet back in 2013 or something. And they couldn't figure out the password. So they got like a hacker to hack into that wallet. The hacker hacked into the wallet, took his share and gave them the rest. And they both cashed out like $5 million at the peak of the 21 bull market.
Damn. All right.
Yeah. So he cashed out. I think it was through BTC Markets, cashed into his bank account. I think it was like a couple of weeks later, he got his door kicked in from the AFP saying, where did all this money come from? Please explain. They took his hardware wallet and they seized the bank accounts. And then he had to go to court to prove where he got this Bitcoin. And he could only prove, I think, like 75% of it, because maybe some of it was from Silk Road or whatever. The court ended up taking like a 35 Bitcoin donation because, yeah. So, yeah, these things happen, you know, and he didn't get the money back until I think it was like 2 years later going through the court.
So like this guy, other than that, he had no criminal record, nothing that would come up on the radar to say that this guy.
Not that I know of. Yeah.
Like that's funny that you say, oh, just because you got $5 million doesn't mean the AFP is going to knock on your door, right? I mean,
well, he was earning, you know, 50, 60 grand. And then all of a sudden he gets like, you know, $5 million.
Yeah, right. That's crazy.
And and then he got an audit from the ATO and we had to go through and work out all of the tax applicable. And I spoke to the ATO officer. He was from like the financial crimes division there. And I said, do you understand like what's happened here with the court? He said, yeah, we've got all the court documents. They've sent it all over to us. We're already aware of everything that's happened. So that the court and the ATO talk as well. They've already had all that background information. And what was really interesting was I said, you know, what wallets, etc., did this client have? And, you know, exchanges. And they said, you know, we can see on chain, you know, it was BTC Markets, something else. And then there was Easy Crypto or something, whatever it's called. There's the one in New Zealand. I asked the client about that exchange. I said, do you have this do you have an exchange in New Zealand? Because they started asking about all these international questions. I said, no, I don't, I don't have anything there. I said, okay. But the ATO had this information about that. So then a couple of days later, the client rang me back and said, hey, that New Zealand exchange, that is the hackers exchange that the Bitcoin was sent to in return for his payment. So what was going to happen? So they tracked that on chain. Does that make sense? So then essentially what would have happened was, if we didn't put together the audit documents and tax reports for this client, they were going to assume that was the Bitcoin that was sold to this New Zealand exchange for, I think it was like 3 million or something like that, as part of their service, and he would have got taxed on that at market value. So what I'm saying is, if it's worth their time, they're going to do the investigations. They're not going to come and chase you for your $5,000 on your Solana wallet.
Yeah. How do they look at things like Tornado Cash?
I haven't come actually, no. During one of the audits, like, it's clearly labeled Tornado. They never said anything after we've given them the data.
Yeah.
I got another funny story about that. We spoke to Chainalysis a few years ago, and because we were thinking about using it just for tracking, on-chain tracking, to help reconcile clients' data. And there was 3 of them there, and they're trying to sell me the product. And I said, oh, what about, things like Monero and Tornado Cash? Oh, yeah, we can track all that. I said, oh, can you now? Okay. Which I think is actual bullshit. And I said, but these things are important for people's privacy. Oh, people shouldn't have privacy on the blockchain. I said, okay, well, why don't you send me your bank statements for the last 5 years? He goes, oh, I didn't know what to say to me.
That's right.
I said, that's exactly the same thing.
Yeah.
Yeah, but people shouldn't have privacy on the blockchain because they're trying to hide money. Well,
that's not the dumbest thing ever. Because if I was a criminal, I'd be using cash. Right?
Yeah.
Why would you use a highly tracked public ledger of all the things that you do? That's the dumbest thing. That's the dumbest thing ever. So yeah. Anyway, that's always funny when people say that it's used by criminals. No, criminals aren't dumb. Dumb criminals get caught.
Yeah.
But smart criminals aren't using blockchain.
Maybe Monero, but I mean, you look at like that Bybit hack, and they tried to route it through. Well, there was a few hacks they've tried to route it through Thorchain and things like that. And, but you can track it.
Yeah. Monero, Tornado. Yeah, you need to leave it in there as far as I know. Like, if you just put it in there, then take it out in the next block or couple of blocks, I think it is actually pretty easy to track. Yeah. Like, you need to leave it in there for a long time. Longer the better.
Correct. But then you could just put it into Tornado Cash again and mix it again.
Yes. Well, yeah. I mean, you could then bridge it and then use a mixing service on another chain and then mix it again and then buy Monero and then mix it again and then she's out of there. Yeah.
Well, wasn't there one on Bitcoin, Samurai, or is it Samurai or Wasabi or something?
Yeah. Like those, I think, I forget which one it is, Samurai or Wasabi, and those guys are like under arrest or something. They're in trouble with the law, and all they did was write open source software. Like, they didn't even do any, moving of money. Like, it wasn't them trying to hide their own money. Like, they just wrote the thing. I think it's one of the wallets. Like, there's a separate one with the Tornado Cash guys, but I think they're okay. But I think the wallet one that actually has a mixer in the wallet.
I think it was Samurai. Yeah.
It's not good. For someone who is mainly a buy and hold investor in shares or crypto, how much worse off are they realistically going to be after July 27? Like, you showed me that calculator before.
Yeah.
That was good.
Yeah.
Let's show the people Adrian's tool that he's written. Claude Magic.
You see that?
Yeah.
A little bit.
Can.
Yeah, so as an example, if you have, let's say you're earning 50,000 or whatever, as other income at the moment, and you bought Bitcoin, 1st of July 2021, so a few years ago now, and it cost you 10 grand. So similar to like the example I was trying to give before, the market value of that Bitcoin is now 110,000 at 30 June 2027, but I end up selling it for, call it 160 grand a year later. So I've got like these two parcels now, 100 grand pre-indexation, I'll call it, and then 50 grand gain post-indexation, which is the 160 less the 110. So if we look at that and we scroll all the way down, because of the new rules and the indexation, the 30% floor, you're going to end up paying another 8 grand extra in tax on that 50,000 increase. And obviously, the rules get worse and worse. It gets worse and worse the higher the value goes up, because you're literally getting rid of that 50% discount. Like, let's say we go next bull run, we go ballistic 2029, I'm just making something up, and we sell for like 250,000.
Yeah. Assume CPI is, what do you got? 2.5.
2.5.
Oh.
We can call it 3.
real inflation's like 9. Oh man.
We'll call it.
Is that what is the number that they're going to use? The trimmed mean or the what are they going to use?
I don't know.
You don't know? That doesn't say.
No.
Okay.
Let's say 3.5, right? You're going to end up paying almost 30 grand more in tax.
Current rules 40,850. New rules 68,465. And you sold it. What was the
price? 250.
Okay, one cash kept 199. Cash kept 170. Right. Wow. Wow. That's
a lot.
It's a lot. What are you thinking when it comes to next June 30? Let's say the market is kind of where it is now. Would you sell and just be done with it? Or, I mean, obviously if it's pumped into all-time highs, you sell. But with this now, if you've got a 50% discount, is it worth it? Holding on and then hoping that it goes up?
Yeah, it depends on how much did you buy it for.
Yeah.
Like if it's in your personal name,
yeah.
How much did you buy it for?
Yeah.
Like in that example, is it better off to sell before 30th of June? If I bought it for 10 grand, it's at 110, is it better off selling it before 30th of June? One, it depends on what your other income is, which factors in this whole 30% minimum. So if you're already working, you're earning like 100 grand, then probably not. If you're not earning any money, yeah, potentially it might be worth selling because there's no 30% minimum. So if you're not working, you make 100, divide that by 2, 50 grand, you're probably only paying 5 grand in tax.
Yeah, okay. Yeah, so in your personal name and you buying and selling shares, the tax rate is whatever your personal rate is. So if you're not working and you earn no money and the only money that you earn is through your investments, and let's say you have no other investments other than your trading, if you earn no money and you sold 100,000 worth of Bitcoin, would you be taxed at zero? Because you're under the tax-free threshold for your income, right? Because you didn't earn any money all year, right? Because you're living off cash or whatever. Like, I don't know. You got no job.
Yeah.
And you've got Bitcoin sitting there. And you go, right, I need some money because whatever reason. So I sell it. I've earned $0 the entire year. You're under the tax-free threshold at whatever 18 grand it is. It's not income. It's a capital gains tax event. Would that be tax-free?
But no, it's not. But have you made 100 grand profit?
Yeah, but so isn't it that you get taxed at your nominal rate?
Yeah. So if you've made 100 grand profit, that 100 grand gets added to your income
Of zero.
because yeah.
So now you got 100. So it's 100K worth of income, not 100K
Less
worth
than
of
50%. Yeah.
But it's not right. So capital gains are treated as income then for a person.
Yeah, correct. Yeah, it just gets added to your income. Because like other factors, do you have like prior year capital losses that you can offset against? There's going to be all these different factors that need to come into play, whether or not you should sell or shouldn't. Should you move over to like another entity? And obviously like the big one's going to be based on the price. Do you have prior year losses? Do you have any other income? How much of an unrealized gain is there? How long are you holding it? Like there's all these different factors that need to get taken into account to see what's going to be the best thing. And then the only unknown variable is what's going to be the price in a year. But I'm encouraging to have a lot of chats to clients in like April, May, June about this exact issue. We just don't know, one, exactly how the order of things is going to work until, Parliament finalizes, and two, where the price is.
Can crypto or stock capital losses ever be offset against salary or other ordinary income, or are they strictly limited to future capital gains? That's future capital gains, right?
Yeah, it is. But if you're considered a trader,
okay, define a trader.
Define a trader. A trader will be defined as satisfying a number of variables or features for their trading activity. So that's a politician's answer, but in a nutshell, it's how many trades are you doing? Weekly, monthly, etc. I mean, obviously there's different types of traders. There's 5-minute traders, there's daily swing traders, there's monthly swing traders, etc. Do you have any other income? Is that your full-time job? Have you got any experience in it? What's the volume like? What training have you done on it? Do you have a trading journal? There's all these different factors that the ATO will look at based on old share trading rulings, which obviously doesn't suit crypto, because you might look at the ATO's guidance on share trader and they'll say, this person's done 100 trades. That means they're a share trader. Someone in crypto can do 100 trades in like a day.
Yeah.
So
yeah,
it doesn't line up correctly in terms of using shares versus crypto. So prior year experiences, how much capital are you putting in? Are you borrowing to put money in? Define trading system, so like a trading journal. Okay, I'm entering here, I'm exiting here, or is it just like, I'm going to buy and just see what happens? I mean, obviously you're probably a lot more methodical in terms of your trading. You've got charts and buys and exit sells, etc., that you look at, whereas some people just buy and be like, I just hope it goes to the moon, and I'll sell when I sell. That's not like defined trading strategy. And again, it's not just because you've done 1,000 trades in a year doesn't mean you're necessarily a trader as well. They look at it from an overall point of view. Does it suit someone that's in trading style? Now, if you're literally just trading crypto all day and you've got no other income, then and you've got $5-10 million worth of volume, then you're probably going to go down as a trader. And it's also like, what tools are you using? Like, you wouldn't be using CoinSpot buy and sell to do trading, because they charge you fucking 2%, and plus the spread's like horrendous. You'd be using something like Binance or Bybit.
Yeah,
Hyperliquid.
Yeah, explains why that guy's a billionaire. I didn't know that guy's a billionaire. Did you see that on the news?
Who?
The CoinSpot guy. There was a photo. I don't know why there was a photo of him, but No, I had no idea. And there's a photo of him getting in his car or whatever. And I go, well, why are they taking a photo of him? And they just casually dropped that he's a billionaire. I go, excuse me? I go, well, that makes sense because their fees are horrendous. So, good on him.
Well, you don't need to be the cheapest. You just need to be the easiest.
Yeah, there's a lot to be said for the UI. I do hear that it's quite easy. The new 30% minimum tax on discretionary trusts looks like it kills the classic family trust bucket company thing. And we talked about that before. What are the viable alternative structures for investors now? Is there one?
Yeah. So I probably didn't touch on the bucket company side. So like following on from what I was talking about with these refundable offsets, non-refundable offsets, like if you're distributing to a individual, then it'll refund up to, the 30%. But if you're distributing from a trust to a company, this tax that the trustee is paid of 30%, that offset doesn't get distributed or taken into account to the company. So you could like distribute 100 grand to the bucket company, already pay the 30% with the trust, so there's 30 grand gone. The distribution goes there, and then the company will pay an additional 25 to 30% because you could effectively be paying like 55 to 60% tax if you do that.
But that doesn't happen now.
Nah.
Right. So now it doesn't happen, but it will
It will from 1st of July 2018, I think it is. Yeah.
Wow. Okay.
So they're trying to kill that.
Yeah. So is there an alternative structure?
I think if you're trading, like if you're actually just doing trading, I would go with a straight company.
Just so don't be a sole trader, be a company.
Yeah, if you're making money, right? Like if you're just starting out and you think you're God's gift, like I'm gonna be straight here, and you're like the best trader ever because you traded in the bull market while all the meme coins were popping off, that doesn't mean you're a good trader. Like I've seen people come, make some good money for like a few months, think that they're the best trader ever, and then they lose it all. Because they're not disciplined. I mean, you would say, you know that from experience, right? So I always say to clients, look, trial it out in your personal name, see how you go. If you're consistent and you're getting good, and consistency is the key, then move over to a company structure, and you might have yourself or like potentially a fixed trust or something underneath, or you and your wife as a shareholder. If you're married, or if you're single, you just have yourself as the shareholder. So then you capped at this 25%, and then you strip the money out as a dividend over time. That would be the viable option if you're trading. If you're investing and you're going to be putting fresh money in, right now, if the CGT rules don't change, and again, there's a lot of factors that need to come into play. How much money you're going to make, how long you're going to hold the asset for. I mean, if you're going to buy Bitcoin now and hold for like 10 years, probably just keep it in your personal name. If you're going to buy now and sell in the next bull market in 2-3 years, probably put it in a company. But it's all about the plan.
Yeah. What's the costs for setting up a company if people are there'll be people considering doing that now. So
probably about $1,000.
Yeah. Okay. And it's like a one-time thing, or do you have to like pay a fee to keep the company open every year, or? Yeah.
So then there's about a $300 or $330 payment that gets paid as a registration fee. And then obviously you got to do accounting fees every year and lodge a tax return. And that just varies, depending on what your activity is like. A lot of people are moving over to say super funds now because of that taxing environment.
So are they trading? They're using the super account to trade in.
Probably just more for like long-term investment for the super funds.
Okay. But if you could instead of getting a company, could you just set up a separate super fund and trade in that, and then is that 15% or something?
It is 15.
Yeah, but you
hold
can't
over
touch the
12
money until
months, 10.
yeah, you can't touch the money until you retire. That's the only downside.
Correct. That's the big one.
That's the big one.
So if you're like 30, 35, I wouldn't just be dumping, 100 grand into the super fund, because then you can't get it for another 25 years.
Yeah.
Like, it's silly.
Unless they change the rules again.
Well, I mean, conspiracy, I think they're just trying to make everyone put money into super, and then in a few years' time, they're going to say, oh, that 15% on super, because this is under $3 million, we think we need to tax it more like companies now. So we're going to make it 25, and we're not going to give you the CGT discount, and you're not going to be able to get it out until you're 70.
Yeah, that's the thing I don't
And we're going to tax unrealized gains too.
Oh.
That was the other one that came in.
Yeah.
That hasn't come in, but
no, they talked about it. They're talking about it. Yeah. That's the only thing that stops me from putting more money in super is that I can't touch it. And I got no faith that the rules that are in play now will persist. Like, retirement age is now, right? It'd be cool if you could say you could attach a deposit to the rules at the time. So this 100 grand that you put in this year, the rules at the time were retirement years was 65 or whatever it is, 67. So that 100 grand you can take out at 67. And then the years go on and they change the rules. Okay, so this lot of money now you can't touch until you're 70. I'd be cool with that. At least it's all up front and they don't shaft you. And you can make a informed decision about it rather than hoping and praying and going, oh, God, they're going to change the rules again, so I don't know what I want to do.
I think if you're like 50 plus, it's a viable option because you're getting there, right?
If you don't need the money straight away, yeah.
Correct. Yeah.
Like if it's a trading income thing.
But if there's a lot of people that are moving out of their normal industry fund or retail fund and opening it up in the self-managed super fund, like we have heaps of clients coming to us and want assistance in setting up a self-managed just to buy Bitcoin and gold. Like that's like probably a big percent of our client base. Is
there any reason they're doing that because you can't get Bitcoin easily in a industry super fund or something like that?
Yeah.
Pretty much. Okay.
Yeah. There's that, but there's also, taking control. Like a lot of people actually want to hold the gold themselves.
Yeah.
Obviously woken up with COVID and government control over the last few years.
Yeah. So like actual physical gold. Okay. Yep. Fair enough.
Gold's not too bad, but when you got a lot of silver, it takes up a lot of space.
Oh, because it's lighter. Well, it's just like
bigger.
For the dollar. Yeah. Okay. Right. Interesting. What size? I hear because super fees and whatever. Like if you're doing a self-managed super fund, what size would you recommend it to be before you even start thinking about it?
I can't really answer that question in terms of recommendations. Obviously, I can tell you what it would cost per year, and then you need to work out whether or not it's going to be viable based on the uplift in the fund value. So to set it up, you're probably paying about $2,000, and then each and every it's a setup cost. And then each and every year, you're probably looking at between 2 and 2.5, which includes the ATO fee, ASIC fee, accounting fees, and audit fees.
2.5. So your gains per year need, if they're not at least $2,500, you're just treading water. So you need to make $2,500, $2,000 to $3,000. And then that number will increase as inflation takes over. Then you need to also grow the fund higher than inflation in order to actually make any money. Yeah, right. Okay.
You wouldn't open up a self-managed with like $20,000, right? You wouldn't do that, right?
Okay.
The old financial planning number was always 200,000, but that's based on old data in terms of how much is your management fees going to cost for us taking care of your share portfolio, how much of the accounting fee is going to cost, so that could rack up to like 5-6 grand versus what are you just going to get putting it into, your normal retail fund. Because obviously, normally when you go to a financial planner, they're going to say, we'll put you in our basket of shares, and we'll take care of you, and then we'll get you, your 15% or 10%, but, we're going to add on our, 2% fees, etc. So that's where they get that from, and they round it down sort of situation. But based on like historical percentages of, what they would get in the market between, 5 and 12, 13%, whatever it is. But obviously with crypto or gold, it's different. I mean, historically gold hasn't gone ballistic apart from, this last year or two. If you got Bitcoin in there, who knows, could do anything. But yeah.
Okay. Interesting then. Yeah, it also kind of makes it cheaper just to open your own company, doesn't it? Cop the 30% tax, but you're not like the yearly fees are, like $1,000 or something, maybe less. Depends on how many trades you do, I guess.
Yeah.
All right. Last question. Here we go. For all the biscuits, if you could give one clear message to all listeners about these changes and what it means for building wealth in Australia going forward, what would it be?
I think, like right now, probably don't panic. There's nothing major that needs to be done before this financial year. I'm assuming you'll post this in the next day or two.
Yep.
So there's nothing major you need to do unless you've made great gains this financial year, which probably majority of people haven't, and you want to offset that loss against. So you might sell down some coins to offset the losses, or you might have had gains in shares or property you might have sold this financial year. So you want to use your crypto unrealized losses, sell them down to offset against the capital gain. That might be a thing you might want to do. But in terms of these CGT changes, again, we don't know exactly how everything's going to work. There's a lot of nuance in it. What about this? What about this? What about this? Examples that we don't know yet. So I think the big question is keep doing what you're doing, and then the big major change will come after we know we have that assurance, and then April, May, June next year, before these changes come into play, it's like, okay, well, what do I do? Do I sell? Do I move to a company? Discretionary trusts are going to have like this rollover applicable. Do I move it out of the trust? Do I move it out of a company? All those discussions. Do I sell all of my assets in my personal name, get the capital gain, then dump it into a new self-managed super fund as a concessional contribution? So I offset the gains in my personal income against that superannuation deduction to bring down my income. I might get it to like 15% overall. Like there's those sort of conversations that will happen, or the flip side is like right now we're in the bottom of the, basically the bottom of the bear market, thereabouts. Do I move it into, like if I'm break even at the moment or I'm in a loss position, maybe it's better off taking the loss. Do I move it into super now if I'm 60? Like if I'm already 60 and I see Bitcoin going to, 200 grand, why wouldn't I put it into the super fund? And then when I sell it, it's tax free. Like, and I can get it out anyway. Like there might be that.
Yeah. Okay.
So I was speaking to someone yesterday where they're in that exact situation where they've got, I think he said about $500,000 in unrealized gains. And he said, the plan is sell that down. We might spread some between this financial year and next, get the 50% discount, dump it all in the self-managed super fund, get the tax deduction, and then moving forward, everything's going to be tax-free because he's retired and, not working. So, at these prices.
Yeah, good plan.
Yeah. It just depends. It depends on your situation. That's the biggest thing. Yeah.
Everything depends, doesn't it?
It's a depends answer.
That must be your biggest annoyance. You wanna answer, but there's like 7 answers you could give, and you don't know which one's the right one.
Yeah. It does happen.
Oh, okay. All right, Adrian. Thank you for your time. We've gone well over. So thank you for watching at home. If you made it this far, you troopers, thanks so much. Thanks, Adrian.
No worries.
Talk to you guys soon.
No worries. Thank you.